What's going on, guys? Welcome back to another video. All right, so today's video is going to be about liquidity. So what is liquidity? Liquidity is all the positions that move throughout the market. Okay, so it includes stop losses, limit orders, and stop orders. This includes stop losses of positions already in the market as well as positions waiting to be triggered. Liquidity is the market's fuel source. Okay, so if liquidity is the market's fuel source, you will see that the market naturally gravitates towards it. So if you really think about it, since retail traders trade with structure, structure is ultimately just liquidity. All right, so if you look at this right here, for example, you will see that the market is moving to the upside, okay? Creating higher highs and higher lows. So it's in a bullish trend. Liquidity is going to be underneath these lows, okay? So there's gonna be liquidity underneath here and liquidity underneath here. The reason is because most traders use structure to trade, okay? So because they use structure to trade, what happens is every time price comes and creates that new higher high, okay, in a bullish market, you'll see that pullback occur. And during that pullback, people will ultimately enter the market. So whether you're trading break and retest traders will be entering right here and then keeping their stops below that low. And then you'll have your breakout traders that enter as soon as price breaks above this over here and ultimately keeping their stops below. And you also have your smart money concepts traders. Okay, your smart money concepts or any other traders that use order blocks and breaker blocks ultimately trade the same. Okay, well, this will be their order block or their breaker block or whatever. They will keep their stops below the low, so indicating that everyone's stop losses are below and above structural highs and lows. Okay, so now we're going to look at some chart examples to identify where the liquidity is and help you guys understand what liquidity really is. Okay, so the market moves lower. You can see in this example, the market moves lower, takes out this low over here, moves higher, respects this high. Okay, so now there's liquidity above here. The market moves lower again, and then ultimately comes for that liquidity. Once that liquidity is taken, right, you'll see the market comes for this liquidity. Okay, let me just draw it out with lines, straighter lines. Okay, so that's one right here. We also got liquidity over here as well. Okay, so you'll see the market comes for that liquidity over there, and then next comes for liquidity above. Okay, after that, you'll see again the market comes for the liquidity, and so on and so forth. Okay, so the market's always moving from liquidity to liquidity. So this right here, taking out this high over here, is ultimately grabbing liquidity and then moving lower. And we also got, right, trend line liquidity. So that's another type of liquidity that is in the markets. Okay, so it's ultimately the same thing in terms of structure. We have, let's say, the market trending lower. Now, every time there's a break of structure, each of these pullbacks, people are entering sells. Okay, so now we got trend line liquidity. Okay, there's liquidity in that entire area. Example being right here. Okay, the market comes for this liquidity over here and then finally moves towards this liquidity over here and then moves lower, takes out this, and then finally comes for this liquidity. Okay, so now let's look at another example so you guys can better understand it and identify liquidity. All right, so let's look at this for example. Understanding that trading with structure is ultimately just liquidity. Now you can identify where you can expect the market going. Okay, so after, like I said, after this high over here got taken out, you let the market engineer that liquidity, okay, which it did, right? Pulled back, respected the lows, went higher, respected the lows again, and then finally took that out. So you can easily look for long positions while it's moving to the upside, some sort of entry on the lower time frames in this area towards this liquidity over here. Okay. And then you wait for the market to do its thing, and you'll see ultimately this low over here gets taken out, that liquidity gets taken out, the market starts moving to the upside. So you can easily look for some sort of entries in these areas towards the highs. Okay. Understanding that the liquidity is ultimately over here, right? Because this is where you got that buildup of liquidity. Market respect this high over here. Look at that. Comes for this. And now you look for the opposing liquidity, which is basically this right here. Break of structure induces buyers. You got this pullback and then moves higher. So the market can come for this over here. Okay. Look at that. The market moves higher, takes out all this over here. Okay. Also comes for liquidity on the left hand side. Okay. And then you'll see after this, right? So taking this liquidity over here is very, very significant because now you have to understand that because the market was trending bearish the entire time, we got traders trying to sell from this whole area. Okay. From this whole area. So now once that gets taken out, right, and all those sellers have been taken out of the market, now the market has that move down, right? Grabbing all this liquidity over here. And then, yeah. So let's look at another example, okay? What we see is the market have this impulsive move down, okay? Right? Grabbing liquidity from the lows, okay? And then starts moving to the upside. And you'll see that the market is respecting this area right here. Okay? This whole area. Now, once that happens, the market moves lower, right? Taking out these lows over here. Okay, we got these lows over here taken out. And it's such a sharp move down, it induces sellers. So now sellers want to enter the market. And you'll see that the market, every time it moves higher and reacts from certain areas, like for example, this right here, you'll see a break of structure, right? A move lower, taking out this, and then ultimately coming for that liquidity, okay? And then you'll see it move higher, okay? And look over here, even takes this one, this high over here as well, okay? And then coming lower to take out this low, and then ultimately moving higher and taking out all the highs. All right. So if you look at this leg, if you look at this whole leg over here, you'll see that the market was moving to the upside and just creating liquidity the entire time. Okay, we got that trend line liquidity, and then you'll see something over here get taken out. Okay, and then you'll see that move down, clearing all that liquidity, and then finally move to the upside. So I hope you guys understand the general idea of what liquidity is, right? So it's basically where buyers and sellers are getting into the market, where their stop losses are, and ultimately, right, the market coming for those stop losses, okay? So if you can understand where the liquidity is, it will be a lot easier to identify where not to get into trades, okay? So I hope you guys learned, benefited from this video, and I will see you guys in the next video.